Graniteshares has set May 7 for another attempt to launch 3x XRP ETFs on Nasdaq. Graniteshares 3x leveraged puts the focus on the filings remain live, but the repeated date shifts keep the regulatory risk visible. The confirmed detail is that the 3x long and 3x short XRP ETF launch target moved to May 7 after several delays. The opening tension is concrete, whether May 7 becomes a launch date or another Rule 485 delay. That matters for U.S. retail traders and XRP ETF issuers because they have to read May 7 target and 5 date moves before the full outcome is visible. The first read should stay tied to those facts, not to broad crypto mood or an unsupported forecast. The baseline starts with this. The effective date moved from April 2 through April 9, April 16, April 23, and then May 7. Graniteshares used Rule 485 delays without restarting the review process or receiving a formal rejection. The measurable anchor is May 7 target, while 5 date moves gives the story its structure. The related signal is 3x daily reset, which keeps the story tied to a specific mechanism instead of a vague market reaction. These details set the boundary for the rest of the segment. What is confirmed, who is exposed, and which checkpoint must arrive before the next read changes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is daily reset 3x funds target triple the daily move and can drift in choppy markets. In plain English, the leverage resets each day, so the fund is built for short-term exposure rather than passive holding. That matters because how leveraged XRP exposure reaches brokerages depends on the mechanism working as described, not on a headline alone. If a viewer misses this mechanism, the story can look like ordinary volatility or routine announcement traffic. For Graniteshares, it is really a test of XRP ETF launch and whether Nasdaq trading begins. If that condition does not appear, the setup stays conditional rather than confirmed. The direct impact lands on U.S. retail traders and XRP ETF issuers. U.S. retail traders could get regulated long and short XRP exposure through brokerage. Accounts the short product is especially notable because clean high-leverage retail short access has been limited. This is where the story becomes practical, because it changes how leveraged XRP exposure reaches brokerages rather than only the mood around Graniteshares. The affected side does not need a grand market narrative to feel the consequence. It needs clarity on effective date. That is why the impact scene stays focused on the user, trader, protocol, regulator, or institution actually named in the facts. The unresolved part is a 6th delay would point toward deeper SEC concern about the 3x crypto structure. That does not prove that the products will launch in 2026 or that demand will justify the structure. The evidence that would clarify the gap is Nasdaq listing activity on May 7 or a new effective date delay. This boundary is not a formality. It is the difference between the confirmed event and the outcome people may already be trying to price. Without that proof, 3x structure scrutiny remains a live risk, even if the first reaction looks confident. Until that evidence appears, the confirmed event and the expected outcome have to stay separate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The clean trigger is whether May 7 becomes a launch date or another Rule 485 delay. Graniteshares 3x leverage should be judged by that trigger, not by the loudest forecast attached to it. If Nasdaq trading begins, the story gains confirmation. If the date shifts again, attention shifts back to 3x structure scrutiny. The useful close is to track May 7 target, 5 date moves, and effective date together, because one signal alone can misread a conditional setup. For Graniteshares, the date itself is the market test,